Good morning. I'm Gary DeWaal, and this is Bridging the Week for December 4th to 8th, and today is December 11th, 2017. After a week that witnessed Bitcoin soaring at one point to over 17,000 US dollars, Cboe Futures Exchange commenced trading cash-settled Bitcoin futures on Sunday night. However, Cboe Futures Exchange's launch of its newest futures contract, as well as upcoming other scheduled launches of cash-settled Bitcoin derivative contracts, are not without controversy. Separately, CME Group exchanges received a generally good report card from the Commodity Futures Trading Commission following a rule enforcement review. However, CFTC staff raised concerns about certain warning letters issued by constituent CME Group exchanges and recommended that either the exchanges or future commission merchants heighten surveillance to ensure that suspended or banned traders don't trade. My head is spinning with all the interest in Bitcoin. So I can calm down and enjoy some quiet time as soon as possible. Let's get started. The Cboe Futures Exchange commenced trading of Bitcoin futures last night. In addition, a sixth exchange, regulated by the Commodity Futures Trading Commission, NADEX, announced plans to begin trading a Bitcoin derivatives contract on December 17th. Last week, FIA, the Exchange Traded Derivatives Industry Organization, also published a letter it wrote to CFTC Chairman J. Christopher Giancarlo, expressing regret that no public discussion had occurred prior to Cboe Futures Exchange, CME Group, and the Cantor Exchange self-certifying Bitcoin derivatives contracts on December 1st. According to FIA, quote, a more thorough and considered process would have allowed for a robust public discussion among clearing member firms, exchanges, and clearinghouses to ascertain the correct margin levels, trading limits, stress testing, and related guarantee fund protections and other procedures needed in the event of excessive price movements, end of quote. Prior to launching its Bitcoin futures, Cboe Futures Exchange announced that it had set its base initial margin requirement for hedgers and trading privilege holders at 40% of the contract's notional value using the daily settlement price. Initial margin for speculators was established at 44% of the contract's notional value. Cboe Futures Exchange noted that brokerage firms were authorized to impose higher requirements. NADEX proposes to offer Bitcoin spreads that will be cash-settled contracts within a floor-to-ceiling range. Under NADEX contract, which appears likely to be marketed to retail clients, if Bitcoin price exceeds the ceiling, the value of the contract remains at the defined maximum, and if Bitcoin's prices drops below the floor, the value of the contract remains also at the defined minimum. NADEX Bitcoin spreads will derive their pricing from the Terabit index published by the Terra Exchange. This index incorporates prices from 9 spot Bitcoin exchanges. CME Bitcoin futures are also scheduled to launch on November 17th for trade date November 18th. The Securities and Exchange Commission obtained an emergency asset freeze from a federal court in Brooklyn, New York, to halt a purported fraudulent initial coin offering involving PlexCoin digital tokens that began in August 2017. According to the SEC, the ICO, which was orchestrated by Dominic LaCroix and Sabrina Paradis Roya of Quebec, Canada, through their unincorporated entity, PlexCorps, was marketed as a means for investors to obtain a new tokenized currency that would net early purchasers a very high rate of return. These returns were supposedly derived from the appreciation of value that would result from investments PlexCorps would make with the ICO's proceeds, profits distributed to investors from PlexCorps' profits, and the appreciation of value of Plex coins when traded on digital asset exchanges. However, charged the SEC, the defendant's offering was fraudulent and the proceeds of the ICO were never intended to be used for legitimate business development. The SEC said that defendants raised $15 million through the ICO. An ICO, in case you forgot, involves the issuance of a new cryptocurrency on a blockchain in return for fiat currency or an existing cryptocurrency such as Bitcoin or Ether. Typically, an ICO is marketed through use of a white paper which broadly describes the purpose of the new cryptocurrency and an investor's stake in the underlying project funded by the new cryptocurrency's launch if it is relevant. The charges against the defendants in the Plexcoin matter are the first filed by the SEC's new cyber unit. However, the SEC has previously brought litigation in the ICO space. And finally, the Division of Market Oversight of the Commodity Futures Trading Commission found no deficiencies in a rule enforcement review of the enforcement programs of constituent exchanges of the CME Group and found the programs, quote-unquote, generally adequate. However, staff made a number of recommendations, including that warning letters should not be issued in circumstances involving quote-unquote misconduct, similar to a few cases identified in the report that allege wash trades, disruptive trading, and spoofing. Although CME Group staff believed that warning letters were warranted based on the particular circumstance of each identified incident, CFTC staff argued that formal disciplinary action would have been more appropriate to serve, quote, as a deterrent not only to the respondents, but also other market participants, end of quote. CFTC staff recommended that CME Group exchanges should formally monitor for prohibited trading conduct by persons who receive trading suspensions as part of their penalties or require future commission merchants to review for such activity, document and explain how it assesses a financial sanction when it notes that a respondent's financial condition warrants a lesser financial penalty, and document why a business conduct committee rejects a settlement offer. The CFTC staff suggested that documentation regarding rejected settlements would help promote consistency among different business conduct committees dealing with similar facts and circumstances. Well, that's it for this week's edition of Bridging the Week. As always, there's more information in each article and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWaal. Have a great week, and until the next edition of Bridging the Week, ciao.